Welcome to Tradespoon and Yellow Tunnel. My name is Vlad Karpel. I'm CEO and founder of both companies. And today we're going to have our weekly strategy roundtable where we talk about current market conditions, any questions you might have about your subscription, market in general, where do I see opportunities? And the goal is to answer any questions you might have. One second. All right. This is my brief bio. I was Executive Vice President and Head of Technology at Options Express. My background is technology. I've been trading for over 20 years. Was the CTO of several publicly traded companies. After they went public, I decided to manage my own money. So my passion is building technology, mentoring subscribers, and manage my own money. Disclosures are very important. Please read them. If you're new to trading stock or options, I encourage you to visit optionsscreening.com so you understand the risk associated with trading stock and options. I'm not a financial advisor. I'm not registered with Finland or SEC. I'm showing you what I do in my own account based on my own risk tolerance level for general education information purposes only. Please consult your financial advisor prior to making any trading decisions. All right, before we let's take a look at the market. Okay, so first we need to figure out, where's the bottom, right? That's the million-dollar question. That's what everybody does. And let's just ask that question straight up, right? We hit a 200-day moving average, came close, not touch, but came pretty close. And then the question, is this the bottom, right? That's everywhere in the news. So is this the bottom, at least for this year, right? From going into October, November, December. So we're in Q4, right? It starts next week. So is this the bottom for this year? How many of you say yes, we have reached the bottom or very close to the bottom? Right? I mean, we could be a little bit higher, it could be a little bit lower. I guess that's all fine. But is 422 or 415, is this the bottom? Or are we going lower, right? Yes or no? How many of you think yes, this is the bottom? And how many of you say no, this is not? Martin, yes. Peter, no. Third choice, not enough information. I don't know, not enough information to make a decision. How about that? So one is yes, yes is yes, the bottom. No, it's not the bottom. 3, I don't know, not enough information. I need more information, right? Or I don't know, right? Close. Okay, yes, no, close. All right. Yes. Andre, Peter, Mark, Bravos, Pierre, Tim. Okay. So probably half of you said yes, half of you said no. I'm going to say I don't know, right? Not enough information, right? Not enough information. It is good that we are, we tested 200-day moving average successfully. We reversed and we have a follow-through, right? So my rule is usually you wait for 2 to 3 days, right? And now we are right at this line, 431, and we're heading into the weekend. So on the weekend, during the weekend, we will find out more about government shutdown and potentially, strike at top 3. If government is shut down, if US government is shut down, that means most likely we're not going to have initial unemployment data on Friday. Most likely, we're not going to have CPI and PPI data the 2 weeks after that. I mean, assuming strike, shutdown is going to be more than a week, right? That means there's no data available, and again, this level of uncertainty is going to persist. right? So most likely we will have on Monday another retest of 200-day moving average, right? If there is a government shutdown. If we can avoid the government shutdown and Republicans and Democrats can find, play nicely and find a solution, right? And will not shut down the government, then you probably have continuation, right? So there's two scenarios and you don't really know what's going to happen. I mean, you can say, no, they will not have solution if you're, based on your biases, right? This is more on the bias side. I mean, maybe you're a politician, you have some connections. I'm not, right? I don't have a connection. I do have certain biases, right? Democrats versus Republicans. So I do have certain biases, but, deep inside, I realize I don't know, right? I don't, right? So if we do have a government shutdown, most likely we will retest 200-day moving average. If we don't have a government shutdown, I think we have a follow-through on Monday. So that's important. If Monday we do have scenario 2, then the answer to the question is yes. Yes, we either at the bottom or very close. It doesn't mean that we're not going to revisit the bottom, but we're very close, right? If let's say there is no government shutdown initially, let's say we get to this 440, right? We talked about 440, 445 overhead resistance, right? I still think usually when you reach 200-day moving average, you tested it more than once, right? You tested it more than once, right? So something like this. But then if by next Friday we're still near or above or a little bit below 200-day moving average, then this is the bottom or very close to the bottom. If Monday government shutdown and you have initial again test of 200-day moving average rebound, then potentially we could keep going lower, right? A lot lower than 420. Not a lot, but you just don't know, right? It depends on the news, on interest rates, how long the government shut down, and then the sell-off can continue. So for that reason, I would propose to be, again, market neutral, right? If you're new to trading, I would say if you still don't have the process kind of solidified, I would propose to have 2 bullish positions, 2 bearish positions, right? Because on one hand, semiconductors can continue to rally, right? Apple is up, Nvidia up, right? Your favorite, most popular stock, regional banks are up. So stocks that got beat up a lot lately, they're still up, but XLP, is weak, right? Value stocks in general are negative. So anything but technology is weak, right? Technology is weak. So I would have 2 bullish positions, 2 bearish positions, right? Because you just don't know, right? It's the flip of a coin. If we don't have a follow-through, right? If we don't have a follow-through next week, then most likely we will retest 200-day moving average. Then it depends on the news. Government shutdown. How long is the government shutdown? Then we have unemployment data. Then we have CPI and PPI data, and that can all drive the market, right? Today we had better than expected PCE data, right? Core months over months came in slightly better from 0.2 to 0.1. The market just needs an excuse to rally, right? Core PCE index dropped more than anticipated, right? And that's, Fed pays attention to that. And even though it doesn't seem like a lot, right? On any given day, it might not make a difference, but because market is so oversold, right? It is bouncing back. But it needs to first clear this line, right? We've talked about this June lows, right, and the August lows. So the June 26th low is important. We've retested it again on August lows. We broke through it on September 20th. So now what used to be support is now overhead resistance. Until we break above this line and stay above this line, you do not know whether this is the bottom or not, right? That's how I would approach the market. You might have your opinion and biases, but it's a flip of a coin. It may or may not hold. So I would be patiently waiting and see exactly what happens. Meanwhile, we do have earnings from Nike, right? They came in better than expected, right? Nike was up 11%. It gave up half of its gains. You can see you know, that market internals are still pretty weak. Market internals are still pretty weak. Give me 1 second. One second. I'm actually managing Nike trades, so I want to get out that short call. Okay. Sorry about this. So Nike announced earnings still up, right? But you know, off the highs. I mean, it sold off so much, and kind of with the idea that the worst part is behind Nike, right? I mean, it went from 130 to 90, so it dropped, you know, 30–40%. And we do have cruise line, Carnival Cruise, announcing earnings. This is the trade that actually sold premium, and it's down 4%. So how do you know? So any questions first? Bullish continuation from Wednesday. How's FedEx? Is FedEx? Ooh, it's not what I wanted. FedEx. So FedEx still strong, right after earnings, retesting 52-week high, and UPS again very weak rebound. You know, day 1, day 2 above this line, that's good. You want to wait at least a couple more days to stay above this line, but for now it's a very weak rebound. And the most important, you know, is our interest rates, right? We did have kind of big reversal from 470, right? A lot of people said that 470 is the top. We touched 470, we reversed yesterday. There is a follow through on better than expected PCE data. But again, the breakout is above 436, right? As long as we stay above 436 level, you really don't know where the bottom is, right? If the rates don't go higher, okay, then this is probably the bottom, right? Very close. But if we break through 470 or revisit 470, right, and go to 5, and after that will be 5, you know, you just need one data point, right? One data point that indicates that inflation is going to stay higher for longer, right? Maybe, you know, September CPI data, maybe PPI data September, maybe unemployment data, and then sell-off will continue. So as long as we're above 436, then you don't really have a green light, right? You don't really have a green light on equity market. Similar picture, dollar. Yes, it pulled back yesterday, it did reverse, right? But it's still kind of fighting for this breakout level from the March liquidity issues in regional banks, right? So in March we had a few regional banks went under, and dollar is now trading above that level. So we need dollar to trade below. It briefly broke through that level, which is really positive. You can actually see silver had a sharp rally, right? Had a sharp rally because everybody got excited. The dollar is dropping. That can boost the, you know, that will give a green light to equity market. But at least as of right now, all the gains have been given away. So what does that mean? Not enough data. We need to wait a couple more days, right? Preferably by Friday, we'll probably have an answer whether we've reached the bottom or not. So it's all about yield and it's all about equity. More importantly than the earnings, right? You can have a great earnings, kind of like Micron, maybe not the greatest earnings, but you have a sharp drop, right? Okay, you have big reversal now because of the, again, dollar and interest rates, right? If we had the down day, then Micron would be down, right? And earnings wouldn't matter as much. All right. Any questions? So how do we, at Tradespoon, how do we help you navigate the current market conditions? We do have different subscription services, right? One is Elite service, where you can actually see my orders and positions and be part of the live trading room, right? Be part of the live trading room. The way I look at our subscription services, there are two types of traders that we have, right? We have someone who's been trading, enough time where they have a trading plan, they keep a journal, they're confident in the process. They need AI, right? They need AI models that can help you find opportunities in the market, right? Like HR block today, right? I closed HR block because and model identified, right? It's not something I had found out. There was a signal, we found the signal, I decided when to enter, when to exit, right? So if you're just looking for signals and you already have a solid trading plan, you know what you're doing, right? You trust the process, then I propose you use these active trader, weekly trader, monthly trader services. This is where you're gonna get your signals, right? Short-term signals, longer-term signals, and just like I'm doing, you can decide when to buy HR block. Or, let's say today we had energy name yesterday, today was UNH, I think, right? UNH, right? So you don't have a healthcare, you don't need to wait for Vlad to tell you when to buy. I will give you suggestions, right? 510 or 505 is the entry point. I will suggest to break it down into use dollar cost average. I will give you stop level, but then you decide, a lot of people say, Vlad, what if it's 511 or what if it's 507, but it's not a 505? Do I enter or do I not? Well, that means you don't really have a trading plan. You don't really know how to day trade, right? Then I would say, this is not the service for you, right? You probably just new to the trading, you still don't know how to trade. Then I would use Elite Circle, because at least in Elite Circle, you will know when I enter and when to exit, right? You don't have to guess, right? So that's what I would propose. I would propose to, if you're confident trader and you need AI model and signals, then that's your services. Active trader, weekly trader, monthly trader, Stock Forecast Toolbox. We have tools membership, right? You can find, probability calculator. We have a lot of tools to help you navigate current market conditions, right? Seasonality, right? We're following almost to the penny seasonality, right? According to seasonality, usually October 1st is exactly, everybody who said we're close to the bottom is right, because due to seasonality, we do reach the bottom end of September. October is still volatile. You're still going to have this up and down price action, but then when earnings season starts, you're going higher. That is the most well-accepted opinion. You ask 100 professional traders right now, what do they think is going to happen till the end of the year? I think 70% of them will tell you this, right? Right. And I'm included in that category. I think seasonality will continue. All right, we will have, volatile October and then continuation, assuming no new data, right? No big surprises like government shutdown or, prolonged strikes at, top 3 car makers, stuff like that. That's new information. Or interest rates jump above 5%, right? That's new information. Then seasonality will not work. But assuming it will, none of these things will, we're not going to have these black swan events, then, seasonality should prevail, right? So those are the tools that we offer. And if you're confident, disciplined trader, you know what you're doing, then that would be the subscriptions. If you want to know what I'm trading, right, if you want to follow the trades, then I would use either Spread Trader, Shadow Trader. Shadow Trader, you just follow all my trades, but you don't have the tools. Some people want both. They want the tools and they want to follow my trades, right? That's elite trading circle, because you don't want to trade by yourself, right? Even if you're a disciplined trader, I think you will benefit a lot by being in a live trading room, because we have a lot of people, we have a lot of questions, we have traders that have been with us for the past 10 years, literally from the first year, right? I mean, do they really need me? Maybe not, but there's always good questions, always good answers. And you know, you have this aha moment, right? You're like, oh, okay, somebody asked about CCJ, right? Bob, you know, he always has great stock, CCJ. If it wasn't for Bob, I would never follow the trade. But you know, he's been mentioning this trade probably since, I don't know, probably throughout the year, right? So that would be the advantage of why you want to be in the live trading room. And if you're still kind of building trading plan, if you don't keep a journal, you don't have a written trading plan, you kind of, you know, process to use more important than the outcome. Sorry, outcome is more important to the process, then I encourage you to consider Elite Circle. If you just want stock trades, a robo-investor, you know, that's also fine. But if you want to be in live trading room and have tools and know what I'm trading, then, you know, you have access anytime. You can log in, see orders, positions, and every time I trade, you enter your phone number, you get instantaneous SMS messages. And these are not, you know, Twitter feeds, you know, these are trades that go to exchanges, right? This is synchronized with my real account. So all of these orders goes to exchanges, and within not even seconds, but within a second, you get SMS message. Well, seconds probably better. Now it depends on the provider, I guess. But you know, you do get instantaneous messages, right? And this is an example of some of the trades. A lot of people ask me, you know, Vlad, you only trade stock trades and I'm an option trader, or Vlad, you're an option trader and I'm a stock trader. So we listen, right? I understand, you know, this is an educational process, right? We're all here to learn, and we have different types of traders, different, you know, somebody who just started trading, somebody like John, Bob, been trading with us for years. So, you know, we try to give different examples. So one is HR block, right? Never traded HR block, model identified it. I looked at the chart. We were approaching tax season. Makes sense. This was decent trade, right? So, you know, I'm out of HR block this week. Carnival Cruise, iron counters, right? I have a sold credit call spread, sold credit put spread, you know, collected almost 1%, 6 cents plus 14 cents on the $14 stock. 1% gain overnight, right? That goes back to the idea of compounding investment. Usually I don't look for 10 baggers, right? I want to find 10 baggers, right? But usually it's hard to do that. Like a lot of people ask me, Vlad, when is the next 10 bagger? If you trade options, you could do it, right? That's not super difficult, but consistently, even with options, consistently investing $1 and making $10 in a short period of time, or even in a long period of time, the probabilities are against you. This is a fine strategy, and a lot of people want to do this as long as you come with an open mind, realizing that this will occur only, I don't know, 10% of the time. Only 10% of the time you're going to invest $1 and make 10. 90% of the time you will invest $1 and it will be worthless. So then it becomes the game of, you know, probabilities, right? How often are you correct when you look for 10 baggers? How often you're incorrect, and then the aggregate of your successful trades has to exceed the aggregates of your unsuccessful trades. And that approach, it doesn't really matter if you are looking for 1% return and you're right, you know, 80% of the time, or if you're looking for, you know, 1,000% return and you correct only 10% of the time, right? Because if the aggregate of your losing trade is greater than the aggregate of your winning trades, well, it doesn't matter what strategy you're going to use, your portfolio will not grow, right? And you're kind of spin your wheels a lot. So you have to make sure, that's why people say you have to cut your, you know, you have to be disciplined, cut your losers short. What does that mean? You always risk the same amount per trade, right? You can buy HR block, you can buy Carnival Cruise, Micron, XLF. You can do any trades you want, as long as you always risk the same amount of money, right? And I propose in our notes, it says everywhere, I propose to have only 4 active positions at a time with maximum loss of 2.5%. Right, market can go up 5% from this point, market can go down 5% from this point. As of today, I would propose that nobody knows exactly what's going to happen. For that reason, as of right now, I would be too bullish, too bearish, right? You can say market is going up and you can have more bullish position, or you can say market is going down 5%, you can have more bearish position, but it will be incorrect to say that I know exactly what's going to happen and have all bullish positions or all bearish positions, right? Though I've been saying that over and over again. Almost every day there's, you watch Bloomberg, CNBC, and somebody comes out, are you successful? Yes. What do? I run long short funds, right? Long short macro funds, but the idea is that you have list of, you buying strong stocks, you're selling weak stocks, right? And you rebalance your portfolio, right? Market sold off, okay, you have less bearish trades, right? You more bullish. Market rallies, okay, you have less bullish, more bearish, right? You rebalance, but at any given point you have both. In the sideways market, this is the most successful strategy, right? Market neutral strategy, whether you're doing it with options and using iron condors, butterflies, spreads, or if you're not comfortable with trading options, you're using stock, right? Long and short stock. And that's what we do at Elite Circle. And that's the mindset that I propose, right? So going back to compounding investment, this is an example of the Carnival Cruise HR block. Usually I look for 1 or 2%, 5%. Right? In case of HR block, I think it was actually 2%, 3% on the second half. Short trade, right? I bought it at 42.23, 43.65, $1.40, right? So 3%. 3%, in 2 days, okay, that doesn't happen very often, but when it happens, it's good. And Micron, same thing, iron condor. XLF, right? I have longer term trade, kind of directional trade, momentum trade. Perfect example. This was a bear. I've been bearish, well, I've been bearish since May, right? And XLF November put spread, right? I think market is oversold, so I'm reducing some of my bearish positions, right? I closed XLF put spread, same thing, 50s. This was, I think, 50% return, right? 50% return, 60% return. In a short period of time, it makes sense to close the position. Any questions? So we talked about seasonality, kind of a spiders, right? This is a good guideline of what I think is going to happen, right? I just need data to confirm it. Stock forecast toolbox, right? We are using AI models. We have a team of financial analysts and financial engineers, team of financial engineers that have, PhD in physics, PhD in mathematics. They've been trading stock market for years, researching market. There are a lot of new models, right? For a very long time, it was kind of the same models, same neural networks that Google and Microsoft created. In the past few years, with generative AI and advances in mathematics and economics, there are actually a lot of new AI models that learn on the data and try to come up with different predictions and training, right? Whether it's linear regressions or learning on moving averages. But there's a lot of advances, and we're actually constantly looking for these new models that can work in different environments or analyzing different time frames can give you better results, right? So this is an example of our main model. Also neural network, it learns and makes prediction of data and basically says, this data was posted yesterday, right? It basically says, once we reach 431.63, the market is overbought, right? This was determined yesterday, right? And if you look at the spiders, and you look at hourly chart, we reached, what was the high? 431.85, right? So we're talking about within 10 basis points, right? What happened? Market did pull back. right? And most of the time, right, 80% of the time, that's how accurate the model is, 80% of the time, the close price today will be below 431.63. I mean, right now it's too early to tell, it's still 10 o'clock, but 8 out of 10 times we will close below 431.63. So when you do receive a 432 print or 431.80 print, and you're a short-term trader, you probably don't want to hold that position, right? You probably want to reduce your bullish positions. Or if you're a long-term trader, you probably don't want to, if you want to go long, probably you don't want to buy at 431.63. If we drop to 425, today, tomorrow, and you're an aggressive short-term bull, okay, that's a better entry point, right? And this is $6 difference, right? 1.5%. So let's take half of that. If you can save 0.5% on entry point and save 0.5% on exit point over a year period of time, this is an incredible amount of savings. So using these tools can help you not overpaying for entry point. And when you exit position, same thing. Instead of exiting at 425, when the market is oversold, maybe a 431 is a better exit price for your position. So this is a model that I do use all the time, and I encourage you to consider it. Any questions? So these are some of the examples, some of the services we do. I kind of covered them, right? Any questions on Tradespoon services? Robo-investor, lead circle, active trader, weekly trader, monthly trader, right? Kind of briefly touched on them. Seasonal charts, screeners, right? We have different screeners that can give you opportunities in the market. All right. Then let's see. Well, let's look today. So spiders is up. We're close to session high, right? I think 430. Well, actually, we are close to session low right now. Oh, it's delayed. So we're close to session low, right? To the open price. We're close to the open price. Give up maybe 0.5% so far. QQQ is, I think, similar, close to session low. Small caps are weak, right? So pretty weak rebound in small caps on, flat. And value in general is actually turning negative. So it doesn't have a lot of momentum as of right now. And you can see interest rates are also kind of start going higher, so we'll see how much momentum can bulls generate. In terms of other places to invest, crude oil, right? Crude oil energy stocks have been in strong uptrend. They have pulled back, right? Crude oil, kind of overextended, jumped all the way to 95. It has dropped, 5%, so pretty sharp pullback in oil. I think oil in general, is overbought. So I would be careful, chasing crude oil and energy in general, right? Like XOP and XLE stocks, right? You'd have this similar to spiders, right? Kind of head and shoulders, right? Head and shoulders, and there is a risk to the downside, right? The supply is restricted, but then demand, right? Still, people are not sure about demand, right? So if we do have evidence that demand is also winding down, then potentially, crude oil can follow the rest of the market. So I would be careful with that. AI stocks like NVIDIA, still below 50-day moving average, so nothing great. Micron, actually tested 200-day moving average. That's not good. I have noticed that Pelletier is grinding higher, right? Pelletier is grinding higher. Looks like it tried to break out of this range. It's reverted, so that's not a good sign. But it is strong price action where one can say, listen, I think 14 is the bottom for Pelletier or close to the bottom, and potentially we can revisit, by end of the year we can revisit, all-time highs, not all-time highs, but year-to-date highs. So you have 4 points to the downside, 2 points to the downside, 4 points to the upside. This is where you can start maybe thinking about dollar cost average, right? You put your half a position at 16, if this is a reversal and we do drop to 14, maybe you buy the second half, right? So some AI stocks, you want to be careful. EV is very popular, right? Electrical vehicles. Tesla, I mean, it looks weak, I'm not sure if this is something I would start pursuing right now, right? Maybe wait. LI, that was Bob's favorite, looks like also broke down, right? You can see that it only lasts so long. And I know some of these Chinese EV companies are still all weak. Fisker looks like what's the symbol? This FSR. Yeah, Fisker, looks like they're delivering and strong upside action, same kind of idea, right? Is this the bottom? Probably, right? Probably, right? 3 days strong action. They're in the news delivering more vehicles than expected. Okay, you know where your bottom is, 520, $1.30 to the downside, but end of the year, maybe we'll get to the February highs, right? So $2 to the upside, maybe $1 to the downside to the one. I would only commit half of the position. If Fisker retraces back the gains and drops to 530, the idea is to be down only 1% of your portfolio. And at $10,000, you're down $100. And then you make a decision, right? If all the stars align and data points that we have reached the bottom, okay, then you can buy the second half. If interest rates are at 5%, maybe no, maybe, take a loss and find a better entry point. Any questions? Okay, so energy we talked about, electrical vehicles we talked about. What else is popular? UNH, healthcare stocks. So the healthcare stocks, UNH is doing pretty good. LA Lilly, still above 50-day moving average. All right, any questions? All right, if there are no other questions, I do have quick announcement. So we do have a concierge service. Again, we have different subscription, different tools, different things are included in different services. We have different pricing for monthly and lifetime. So you could be saving thousands of dollars, monthly versus, lifetime. So I do encourage you to give Justin a call, 312-625-0287. He's waiting for your call. And, if you want to learn more about our products, or if you're just looking for better pricing structure, then I do encourage you to give them a call, 312-625-0287. Other than that, that's all I have for today. I will see you at the closing bell. And for those of you that are part of the live trading room, I am traveling next week, so Scott will cover every morning bell. A lot of you love Scott. You actually like him more than I am, which is great. Actually, it makes me extremely happy. So this is your opportunity next week, morning bell, to spend a lot of time with Scott. Closing bell, we're only going to have it when Scott does it on Wednesday. So Monday, Tuesday, Thursday, Friday of next week, there's no closing bell. And then there's no closing bell Monday and Tuesday of next week. All right, thank you very much. Have a great day, and I will see you soon. Gene, thank you. Carl, Ed, Gene, Kevin, Martin, Peter. Thanks a lot.